Hello and welcome to Morning Brief Market Sunrise. I'm Ramzan Karmali, live from Yahoo Finance's studios in London. It's Wednesday, 5th November. Coming up on the show, global stocks continue to slide after Wall Street's tech sell-off. The current government shutdown is now the longest on record, and New York has a new mayor.
This is not only how we stop Trump, it's how we stop the next one. So Donald Trump, since I know you're watching, I have 4 words for you. Turn the volume up.
Well, the first thing you need to know is about the reaction to Zoran Mamdani's victory. Many on Wall Street had voiced concerns about Mamdani, but this morning some big names have congratulated him. One vocal critic, Bill Ackman, the billionaire hedge fund manager, congratulated Mamdani and offered his service to the new mayor on X, saying, quote, "Let me know what I can do." The next thing you need to know is that the tech sell-off looks like it will continue today. The global sell-off in semiconductor stocks accelerated on concerns over lofty valuations for some of the AI boom's biggest winners. The sell-off underscores how stretched the AI-fueled rally in semiconductor stocks has become after hitting record highs. Chipmakers have added trillions of dollars in market value since that low in April as investors bet on soaring demand for all things AI. Adding to the unease is also the concern that interest rates could stay higher for longer. Don't forget, earlier this week, both Goldman Sachs and Morgan Stanley warned of a correction, and yesterday, famous investor Michael Burry added to those voices. And the last thing you need to know about is tariffs. China announced it will remove retaliatory tariffs on some US farm products and lift export controls on an array of American firms after Washington halved its fentanyl-related levies on Chinese goods. The moves are part of a broader trade pact between Trump and China's Xi that's set to last 1 year and has, for now, stabilized a turbulent relationship. Before their summit in South Korea last week, the two leaders had been locked in a cycle of tit-for-tat actions that threatened to upend global trade. Well, tariff watchers' attention will now focus on the Supreme Court. It's set to hear arguments on the legality of the authority President Trump has used to impose the lion's share of his tariffs. Meanwhile, the government shutdown is now the longest in US history, surpassing a record set during President Trump's first term. Well, to get more on both of these stories, I'm joined by Ben Wershkul, our Washington correspondent. Ben, thanks so much for joining us. Well, let's start with the shutdown. It's now official. It's the longest on record. Is there any hope that we could see it actually being lifted anytime soon?
That's the big question. So it's, as you mentioned, it's the longest in history. It's day 36 here in Washington of shutdown. There has been some signs early this week of progress towards an end to the shutdown. There's kind of a group of lower level senators who are talking, with the question being whether moderate Democrats will be willing to cross over in return for sort of some clarity, if not a final deal, on this healthcare issue that they've been pushing since the start of this shutdown. I think the big question this morning is essentially what these election results mean for this. Does it derail the talks? Does it make them more likely? There's evidence of both sides, and we're going to get some more clarity in the next few hours on both of those fronts as they look ahead to a deadline. The next kind of deadline for lawmakers, at least, is this Friday. The Senate is scheduled to head in for a recess for a week. So a lot of folks have been looking at Friday as a timeline when maybe there could be some sort of agreement to at least end the shutdown for a few weeks' time. But again, very unclear and kind of an uncertain atmosphere in Washington because of these election results, which went more the Democrats' way than I think anyone expected going in.
And the impact of this shutdown, it's hard hitting, isn't it?
Yeah.
Let's be frank. right?
Absolutely. No, and it's the signs here are that the sort of economic effects could get worse very quickly. Last weekend at the airports was the worst weekend yet of the shutdown in terms of shutdown related delays seen across the country. Transportation Secretary Sean Duffy is even talking about the need to close parts of the U.S. airspace if the shutdown lasts another week. So the impacts there would be really dramatic, especially if this kind of shutdown of airspace scenario comes to pass, especially even if we get close to the Thanksgiving holiday, which is only obviously in a few weeks' time. The other big question here in terms of the economic effects are these food benefits, SNAP benefits. We had a real back and forth here in Washington yesterday about this. The Trump administration agreed to pay partial benefits. They had a court filing. Trump then seemed to reverse himself. Then the press secretary seemed to reverse Trump. So it's very unclear how much these food benefits are going to be paid out, which again, 1 in 8 Americans rely on. So this would be hard hitting. Even a small changes there would be significant.
And Ben, let's move on to a story I know that's close to your heart. The Supreme Court is to hear the arguments on tariffs today. What are we expecting to hear?
Yeah, so this case centers around a 1977 law about presidential authority to declare economic emergency. So the question essentially is, can Trump use tariffs in an economic emergency? This is a law that doesn't specifically say tariffs, as well as has Trump gone too far on his emergencies. He's declared an emergency over everything from fentanyl to trade imbalances to sort of actions in other countries he doesn't like. And this is all going to be before the court at 10 a.m. this morning for about a 2-hour conversation back and forth with the lawyers, with a decision expected into the fall. The question, I think, for the day is how markets are looking at this. I wrote yesterday about how when you talk to experts, you get kind of every different view here of how this is scheduled. This could go. Could this be a pro-Trump ruling? There's a lot of evidence for that because it's a pro-Trump. Trump has appointed 3 members of the court. Could it be anti-Trump because we've seen a lot of pushback from Republicans on tariffs so far? So I think the markets are going to be watching this very closely, especially considering we're not going to have clarity today. We're going to get a sense. Does Brett Kavanaugh ask a question that suggests he's against it? Does he lean for it? But it could move a lot of markets, especially because we won't have a finality today. We'll have the arguments today, and then we'll have about weeks and weeks of waiting for a final decision one way or the other.
Ben Wershkul, our Washington correspondent, many thanks for your thoughts on the tariffs there. Well, Bitcoin fell below $100,000 for the first time since June yesterday. And it wasn't alone in the crypto world. Ether, the second largest cryptocurrency, also fell 9% on Tuesday. Many of the investors who buy crypto, well, they also invest in AI stocks, which links the two trades when one goes bad. Now, the Nasdaq, which is home to the leading AI stocks, fell over 1% yesterday. Why? Well, investors are getting more worried about sky-high valuations. Take Palantir, for example. Its stock price fell over 7% yesterday, despite the data manager's solid earnings results. Overall, Bitcoin's performance this year hasn't been that impressive when compared to assets seen as fairly stable and, dare I say it, boring. Even though gold has recently dipped below the $4,000 level an ounce, it's still up around 50% this year. Bitcoin is barely up less than a tenth. And by some measures, even boring old treasury bonds have pretty much matched the cryptocurrency's performance in 2025. Okay, we're heading for a short break now, but I'll be back with the call of the day and a closer look at what's next for the AI bubble. Welcome back to Market Sunrise. Now, it's impossible to ignore it today as most tech stocks are in the red. Across markets, there's a growing chorus of voices sounding alarms about the AI bubble. According to the Bank of America surveys, a majority of fund managers believe AI-related assets are in a bubble, and 60% say global equities are overvalued. Now, B of A data shows that $75 billion of AI debt issued by big tech hit the market in the past 2 months. That's a giant amount of circular debt. Some warnings from Asia and Europe. Singapore's sovereign wealth fund warned that early-stage AI ventures are being priced at breathtaking multiples and that value erosion, rather than value creation, is a real risk if tech fails to deliver. Finally, there's one voice that's been making the buzz in recent days. Michael Burry, famous for his big short when he basically saw the 2008 financial crisis coming, signalled his view that he is shorting names like Nvidia and Palantir. So the AI hype machine is definitely flashing red. But how should investors respond? Well, my colleague Brooke De Palma reports.
Michael Burry, the hedge fund manager who called out that 2007 financial crisis and the collapse of the U.S. housing market back in 2007, has now put a sour note on this AI trade, perhaps one of the biggest calls on this bubble risk that we've gotten so far that kind of puts a little realness to what could happen over the next few years. And so what happened overnight was his hedge fund manager, Michael Burry, bought put options on 1 million shares of Nvidia and 5 million shares of Palantir. And just to understand how much exactly that is. 1 million shares would be about a valuation of $187 million. And those 5 million shares of Palantir, well, that equates to about $912 million. And so a pretty significant bet here that Michael Burry is making on both of these companies, as all we've been talking about was the valuation of both of these key players within this AI arms race. And yesterday after market close, he went on to X and he shared a pretty interesting post. He basically pointed out one or a few charts, but one in particular was about the cloud revenue segments for Amazon, Alphabet, and Microsoft. And what he pointed out was that during the years of 2018 to 2022, we saw returns of 36%, 45%, and 22% for these three companies. And over the past few years, the return on both of those, or rather all three of those cloud segment revenue, has been significantly lower. And what he said with this graphic that you're seeing now on the screen was, these are not the charts you're looking for. You can go about your business. And this was after this filing had come out. This was based on a regulatory filing that for the quarter that ended September 30th. And so we're now just getting it. And it's definitely causing a bit of fear among investors this morning.
Yeah, definitely. Even though it's all sort of hints and insinuations. He's not coming out with sort of a long screed on all of this. He just dropped those things that you talked about. Now, we are also at the same time, just coincidentally, getting some commentary from big asset managers who were at a conference in Hong Kong, and they're also talking about valuations.
Yeah, at this financial summit, we heard from Goldman Sachs CEO David Solomon. We also heard from Morgan Stanley CEO Ted Pick. And what they said essentially was that these evaluations are pretty significantly high right now, and we could be seeing a pullback. So specifically, Morgan Stanley CEO Ted Pick saying we should also welcome the possibility that there would be 10 to 15% drawdowns that are not driven by some sort of macro cliff effect, calling that a healthy development. Goldman Sachs CEO David Solomon sort of echoed that. But we've heard from so many executives that investors should right now sort of brace for a potential market drop of about 10% over the next 12 to 24 months. Of course, we've had the significant run up this past year, the market around record highs, leading to these really significant valuations. And so now hearing a bit of a correction here definitely is setting a new tone on the street. But all these executives really saying that this would be a healthy correction that could happen, a really positive development for the market.
Okay, well, it has to be said for now, the sell-off still remains relatively contained. We'll keep watching closely to help you read the next chapter for AI stocks. We'll be back with today's trending stocks and some more earnings coverage just after a short break. Time now to dig into the stocks trending this morning. We're talking chips, big tech, AI shopping agents and car makers. Well, let's kick off with AMD. The stock is falling sharply in the pre-market. Last night, Advanced Micro Devices, one of the main rivals to Nvidia's chip dominance, reported a standout quarter by certain metrics. Revenue up 36% year on year at about $9.2 billion, led by its data center AI chip business. And yet the stock is drifting lower in pre-market trade, down almost 5% there. Why? Well, AMD's outlook failed to impress. Even at roughly $9.6 billion of revenue expected for this quarter, the thing is, with sky-high valuations after a month-long rally, good? Well, it's not good enough to reassure many investors who now suddenly think that the AI boom will not live up to expectations. On to Google parent Alphabet, which is getting some good news. Alphabet and the cybersecurity company Wiz cleared a key hurdle to close their $32 billion deal with the US government, saying it would wrap up its investigation of the acquisition. It's not time to celebrate just yet for Google and Wiz. The deal is still under scrutiny by other antitrust regulators. Turning to Amazon now, we have a very different kind of headline. This one is about AI shopping agents. There's a clash between Amazon and Perplexity over its Comet AI browser agent, which Amazon accuses of accessing private Amazon accounts and making purchases on users' behalf via its platform. Perplexity responds that Amazon is, quote, bullying a smaller startup because it wants people to only use its own AI shopping agents. We aren't seeing massive moves in Amazon shares this morning, as you can see, but this story may have major ramifications going forward, as agentic AI in e-commerce is set to be a major area of competition, raising all sorts of questions from business strategies to antitrust regulations. And now, the automotive sector, which is loaded with interesting developments today. On one hand, you have Rivian, the EV maker, bucking the trend after reporting a narrower than expected loss and offering upgraded production guidance. It's ticking higher in pre-market, up over 4% there. On the other hand, legacy automakers are flagging because of headwinds. BMW has cut its margin outlook, citing weak China demand and its delays in tariff refunds between the US and EU. The stock is still in the green today, though. Toyota Motors, though, has warned of a roughly $9.5 billion tariff hit for the year, linked to US import levies, a dramatic number even for the world's largest automaker. Not to mention Nissan's supply chain troubles. Nissan had to slow down production of its best-selling SUV because of a lack of chips. Chipmaker Nexperia is a geopolitical crossfire between the Netherlands and China, and that's affecting automakers that need those semiconductors. And we couldn't talk about automakers this morning without mentioning Tesla. Tesla's annual general meeting is happening tomorrow in Austin, and Elon Musk's pay package is at the top of the agenda. But there's a lot more to watch and look out for. Our autos reporter, Praz Subramaniam, breaks it down for us.
This is not your most standard company, right? And of the three things, the number one big thing is going to clearly be Musk's pay package. That's the one thing that's dominating all the headlines, potentially worth $1 trillion. Thursday's the day of the meeting. You'll find out then. Last week you had Chair Robin Denholm out trying to lobby people, big investors, both retail and also institutional, to vote for Musk's package, claiming that he wants control. We need to incentivize him. He needs to be here. He owns about 13% of the stock, and he wants to own about 25 when it's all said and done to exert that control. Right? Are there better ways to give him that control without all the money? That's what I've been talking to experts about. They're talking about different classes of shares. Musk says it's not possible. Who knows? This is corporate America. You can probably figure out a way to do something like that. But two other things I want to note. There's three directors that are up for election: Ira Ironprice, Joe Gebbia, Airbnb co-founder, and Kathleen Wilson-Thompson, who's a special committee member and also a HR sort of specialist. So those three people are up for vote as well. And then lastly, the XAI investment, right? So this is something that Musk's other company, right? He's talking about a different company here, Tesla. Musk has multiple companies under his domain. The question came up, should Tesla invest in XAI? Musk said, you know what, I want the shareholders to kind of decide on that, not management. The board put that up for vote. The board is not taking a position on that, saying the shareholders should decide. Proxy advisors like Glass Lewis say this is not a shareholder matter. This is a management issue. So we'll see.
We're going to focus once again on earnings. First up, McDonald's. Its US sales topped forecasts as it continues its value push amid, quote, a challenging environment. Its US same-store sales increased 2.5% over the last year during the quarter, driven by higher check growth. That's more than 2.2% Wall Street had expected, and in line with the 2.5% growth seen in the prior quarter. That's according to Bloomberg. Global same-store sales increased 3.6% during the quarter, in line with estimates after a 3.8% rise in Q2. However, adjusted earnings per share missed expectations, coming in at $3.22, less than the $3.32 that was expected on revenue of $7.1 billion. That was in line with estimates, and you saw the share price just slightly down. Okay, now let's go to the world of weight loss drugs. And Wegovy maker Novo Nordisk has lowered its full-year profit forecast. This will be an early blow to the Danish drug maker's new CEO amid a deep restructuring drive to claw back lost ground in a fierce obesity drug market battle. Mike Dustar only took the helm in August, and Novo is going through a tumultuous period marked by a share price plunge you can see there and slowing sales growth. It's also in a bidding war with its US rival Pfizer for biotech firm Metsera. And one other drug maker we'll be hearing from tomorrow is the CEO of AstraZeneca, Pascal Soriot. They have earnings out, and he'll be on Market Sunrise tomorrow live on our show. Okay, let's take a moment now to hear a little about Qualcomm, who have joined the AI data race. Let's hear more about the company from Lopez Research founder. Here's the take. Take a listen.
So when I look at the industry fundamentals of Qualcomm, I see that there's some really good opportunity on two ends of the stack. So we have a future edge AI computing game that Qualcomm is square in the zone for. This would be the equivalent of the next generation of mobile at the edge. So there's that market. But then they just introduced this new data center set of chips, which the thing about that we have to think about, that's a timing game. If you've introduced those chips now, you've discussed that with a bunch of different buyers, those still have to be put into the builds. Those builds can be a year or more away at this point now. So the question is, can they accelerate somebody adopting that design? And it's a newer design, so therefore there's some inherent discussion of what's the risk around that. But the opportunity for them, right now, this is an Nvidia game in the data center for the most part, right? So Nvidia is the company that you will be taking share from, and there just aren't a lot of alternatives right now. So I think everybody's really interested in making sure that they have viable alternatives. And these are good companies. These aren't, fly-by-night startups that you're worried are going to shut their doors next week and won't be able to support you. So we see a tremendous opportunity for future industry-led growth with Nvidia. Whether or not that translates into their stock valuation, we're not clear on that yet, but having said that, there's definitely industry opportunity and momentum available for Qualcomm.
So, Maribel, we know about the infrastructure play, which is all of these companies that you're talking about. As an investor, if you want to then sort of take the next step to use case, where do you even look right now? Because it still feels early, and I know there's sort of a lot of confusion about where it is going to manifest.
Yeah, where we're seeing actually AI being adopted in the enterprise is what I would call some of the very easy, straight up use cases. Like if you look at the customer service, customer experience market right now, there's a tremendous opportunity to leverage AI to do better experiences, to add AI into those product portfolios. So we're looking at companies like NICE, Five9, ServiceNow, Zendesk, all of these have presence within organizations. They're leveraging that AI. They have an opportunity to either deepen that relationship or have AI incremental revenue add-on at this point. We're also seeing the same thing happening in the networking category. So if you look at all of the people that are in the category of the Ciscos, the Extremes, the Palo Altos, there's definitely opportunity for those style companies because they can prove value when they add ROI with AI to their portfolio. So we're seeing some opportunities there from the enterprise buy, but it's still early days. Most of what we hear about in the enterprise is that, these 90 to 95% failure rates, it's not that dire, but we still need to actually tie AI to a return on investment use case. And the only company that's really been talking a lot about that, doing well with that dialogue right now, is Microsoft, because they've had extreme success in their Copilot launches.
Okay, that is it for Market Sunrise for this morning. Stay with Yahoo Finance for continuing live coverage of the markets and your money all day on streaming and online. Coming up next, join Julie Hyman ahead of the market open on Morning Brief. I'm Ramzan Karamali. Go own the morning.